Okay, so how do you make a highly volatile asset work for you? So cryptocurrencies by their nature are highly volatile assets, and they can give you unbelievable returns and losses. So you might have seen that sometimes a coin jumps to 1000%, 10,000%, and then suddenly drops its price to zero. So cryptocurrencies are just like that, and this happens because cryptocurrency is like highly manipulated area where majority of the tokens and selling power is held by a certain group. So first things first is that Bitcoin and Ethereum are the only two most known dominant assets in the crypto space. So these two are the main ones, and then the rest are like the rest are like coins created just for different purposes, but they don't really have actual function. They're just there for speculation and future uses, which I don't know what it's going to be for. But other than Bitcoin and Ethereum, there's stable coins which are pegged to the country's currency. Like USDT is pegged to the US dollar. Same with USDC, it's pegged to the US dollar. Now these two stable coins are going to gain more momentum if this Clarity Act bill gets passes. Now this Clarity Act bill is like one of the main bills that legalizes or gives protection to these assets. Now this bill needs to get passed in the Senate, and as of August 11, 2026, it's currently going through, but it's not stalled, but it's not yet the law. It's not yet legally passed through the Senate. So we just have to wait for when this gets passed, and then this is gonna get a lot of momentum. We're gonna see these two stable coins, their percentage of yield, which is, I don't know, probably 15% or 13%. It's gonna go down significantly to 8% or something if this bill gets passed. I think it's already happening right now. I think USDT before 3 months ago was at 15%. It was giving a 15% yield on some exchanges, but now it's gone to 12%. Same with USDC. Their yield is going down, so I think it's getting some momentum here. Next is the groups that hold majority of this buy and sell power. So in 2024, I think we saw there was a rise in cryptocurrency ETFs, and Bitcoin ETF was one of the main ones which was traded most of the time. So you can see that BlackRock, which is their iShares, they hold most of the BTC holdings in the ETF market. So all these orange lines is the ETF inflows and outflows from BlackRock. So if most of the time depends on if they want to make more money. So if they're not doing major moves, then your money will not move basically, because this is like Bitcoin is like the dominant asset. Other coins follow Bitcoin. And then second is MicroStrategy. So MicroStrategy have more Bitcoin holdings than BlackRock, but it's not that big of a difference. Now imagine if MicroStrategy and BlackRock decide to sell all their positions, then it will just bring down the price lower and then gonna give somebody else the opportunity to buy them. So that is very unlikely to happen. So in other words, they don't want to lose their position and power in this Bitcoin accumulation race. So it going to maybe 20,000 is a possibility, but they'll buy it back again as soon as possible. So they like the control in this market. So it all depends on whether they want to make more money or not. So you have to watch out for their moves. If they make some kind of announcement that says they're going to invest in Bitcoin technology or cryptocurrency technology, blockchain technology, then it is going to bring some momentum to this ETF or cryptocurrencies. And another scary part is that this cold card hack which happened recently, basically a lot of people's cold wallet got hacked, and it drained a lot of cash. As you can see, 116 million got wiped out by this cold card hack, and this cold wallet is not even connected to the internet. So this is like a big security issue for cryptocurrency. So if more of these security incidents happen, then they're gonna lose confidence in their BTC holding, and then it's just gonna go down and down unless they find a solution for this. But that's unlikely to happen, to be honest. It's just a bug which they exploited and used in their favor to hack this cold card wallet. Apparently it was some kind of a Python bug or something like that. I don't know much of it, but it was a bug. And the next thing we're gonna get that is, so we were talking about how do you make high volatile asset work for you. So as you can see, Bitcoin, Ethereum, USDT, USDC, right? So Bitcoin, Ethereum are the two main players here. USDT and USDC is like the safe lane in the cryptocurrency space because they're pegged to the dollar. And when this gets past Parity Act, you're gonna have more legal protection towards this two coins. And then you have these two big major players, and they control most of the market moves in the cryptocurrency space. And then you have this security issue. So this is like a very manipulated market where you are exposed to a very high risk of losing your money if you don't have a plan, and if you don't have any conviction, nothing. So, and just like I said, these are highly volatile assets. If you just put your money and then it does this volatility, it's just gonna make you force sell all your position. It's just gonna show you some red, most of the time red. Then you're just gonna lose hope, and then you're just gonna take cash out at a loss, and you're at a loss. Then so we don't want to do that, and we certainly want to stay away from other risky assets like Cardano, XRP, or Solana, because they have very fast price movement. You never know where they're gonna land tomorrow. So the risk in the cryptocurrency space, it's a very risky environment for an average investor. And by an average investor, I mean someone who's like 24, maybe 20, or in their 20s basically. So the risk profile of that average investor is very high because of the current market conditions and the time period. Basically, cryptocurrency, there has been some runs in the past, like in 2021, 2024, and now people want to bet, I don't know, maybe small amount, mid amount, something like that, even higher amount, if they have seen the past gain. And because of the current economy, like the young investors are more likely to take bigger risk compared to the boomer investors. So we need to keep this in mind, that we are exposed to a very risky market where we have less power, and we are more exposed to making losses than gains. So to battle that, we actually need like a strategy or something. So we go back to the first question again. So how do you actually make this highly volatile asset work for you? So as you can see, this asset is volatile, which means it can play on your psychology basically, and it often leads to post selling. Now it's best to invest less than 10% or even less than 7%. This is not financial advice, but if I were to do it, I'll just do it less than 7% and just leave it for long term. And I'll do the 7% only if I have a solid conviction that there's going to be some profit in that asset. Now that solid conviction has two things. It needs good analysis, and that analysis has to be up to date with whatever the institution, what decisions the big market movers make, like BlackRock and MicroStrategy. And then if you have that, if you find this opportunity, then you need a plan, and that plan will involve most likely a exit strategy and execution strategy. So for volatile assets like this, best to use DCA, because it's gonna give you like an average, and then suddenly if it goes up, you're not losing a lot, but you're slowing down your losses. And if it goes up, if it suddenly doesn't go in the direction you wanted, you can just stop and then just cash out, because it's not going according to your conviction. So the execution strategies will always going to be DCA and limit orders, because we want the price to be lower than what we see in the market. If it doesn't go lower, then we're just saving our cash. So this is like a double a 2-point strategy for execution. Then for exit strategy, we're gonna need some price targets and some conditions to be met to sell our positions. So if you have this type of solid plan, then it's a go signal. But if you don't, you just speculate, and this will happen majority of the time than this. So most of the time, it's just better to speculate just for years or months and get data to make this strategy work. And some point in time, you will get a chance to use this strategy. So when it comes, you just make the best out of it. You make sure you're ready, and then you execute your plan. So what I mean by conditions need to sell your positions, or analysis, or something like this. So, or what, in other words, what do I mean by solid conviction or an opportunity? So basically, I have here is two comparable cryptocurrency tokens. So I've got Near Protocol and Akash Network, because these are both technology-based cryptocurrencies that had somewhat AI narrative to it in the past previous months. So if you see, you need some analysis, some data as to what will drive these prices up or down. So in the first cycle where most of the boom happened, you can see that this was in 2021, 2020, 2021, and the interest rates during that time were very low. It was like basically free money, and the Fed was at the same time, pumping liquidity into the market by quantitative easing. So that was like a really good opportunity to get free money, pump into these assets and get a return. And at the same time, when there was low interest rates and the Fed pumping money into the system, there was Nia, who came out as a competitor to Ethereum. People thought it was like a second Ethereum competitor. People thought it was a potential competitor to Ethereum, and at that time it announced 150 million fundraising. At that same time, Nia announced 150 million fund raising announcement. So it kind of pumped up their prices, and that's how people made a lot of money during this time period. It was during this COVID time period. And then the second boom happened during the AI hype cycle. So these two coins were putting out AI narratives, putting out AI promises, and not AI promises, they're putting out like what they're going to do in AI and how they're going to make AI the future in their blockchain and everything. So that kind of pumped up the prices. And at the same time, there was introduction of crypto ETFs. So these two signaled positive cash flow in these two assets. And at the same time, there was Bitcoin halving happening. So this was like a very bullish period where everything was pushing these two assets upward. And you can see it went up by a lot, like 500%, 1000%. So you need this type of convictions to start investing, or else as you can see in this period, there's no conviction. Nothing is going on in crypto, so there's no reason to enter this market. And so these are the type of convictions. So these are the type of convictions you need to enter this market, or you just wait on the sidelines and just speculate what's going to happen in the future. Until then, you don't need to do anything, and just wait for your time to make a profit in this sector. So right now, the next possible bullish uptrend might be in this stable coins. I don't know how it's gonna work, but everyone is having their eyes on the Clarity Act bill getting passed. So once that passes the Senate, it gives a green light. It gives more confidence in this. It gives more confidence and security for your investments in cryptocurrency space. So that's all I can say for this video, is that to enter this cryptocurrency space, you need to know who controls the market and where does the opportunity lies, basically, and what plan you need to have, and your risk profile, basically. So if you see opportunity, and if you know what the market makers are doing, and what your risk profile is, then you can make some moves in this market. Or else it's just better to speculate and just keep reading the news, see what's happening, and just invest your cash into something else, or just save it, because this is a very risky market to enter, and without knowledge or any type of plan, you're just going to lose your money. So that is all for what you need to do in the cryptocurrency space, and the risks involved in this cryptocurrency market. So thanks for watching the video, and I'll see you guys in the next video. Cheers.